Let's be honest, there's a lot of bad information when it comes to personal finance, money, saving, investing. So in this video, I'm gonna go over 10 money myths that you gotta watch out for. This way you're not trekking on the path to financial freedom blind and fall prey to any financial traps out there along your way. Let's start with number one, and that's money makes you happy. Obviously, this is just plain untrue. Sure, the more money you have, the easier it will be to afford certain things and make life easier. However, without discipline and control, more money will make you less happy. I see it all the time with my generation, generations before me, and generations after. So many people get consumed with that desire to make more money, with that desire to amass and accumulate as much wealth as possible, and they continue to chase that paper, as they say, and they allow money to become their purpose, which is something, let's be honest, we can't take with us when we die. So the truth about this is, yes, money will help you afford certain things in life, but studies show that once you reach a certain level of income, the joy, the happiness, the fulfillment that money you think would give you more of, that actually does not happen. The next money myth is you need a credit card. A credit card is the cigarette of the financial world, said Dave Ramsey, who's one of the personal finance experts. At least I consider him to be a personal finance expert of our time. Now, I personally will admit that this metaphor may be a bit extreme, but I get it. I would say early in life, there actually is no need to have a credit card, and the time to get one would be when you have a steady job, when you have a steady source of income. You can do more harm than good with credit cards. And I'll be honest, there was a period of time for me where I didn't own a credit card because of the bad decisions that I made previously in life. Now that I do have one, I barely use it. If I do, it's probably for a one-off purchase here, a one-off purchase there. But if I was in someone's shoes who wanted to build credit and needed to build credit, then wanted that credit usage history, what I would do is I would assign that credit card to some kind of bill or recurring payment, tie it to my checking account so that it does get paid off each month and I don't get hit with any interest charges on the balance that would be there that could really hurt me financially. The next money myth is that you have your whole life to save for retirement. Instead of saving a little money here and there when I was 18, 19, 20, I'll admit I was wasteful. Saving for retirement is not something you wait to do after the age of 30 or 40. You want to start as early as you can so that you can let compound interest do its magic. And even if you haven't started yet, the best time to invest, as they say, was 10 years ago or yesterday or whatever the quote is. And the next best time to start investing is today, tomorrow. So don't delay it any further. Get started so that that compound interest snowball can start working in your favor. The fourth money myth is that a traditional brick and mortar bank is the only place to have a savings account. My wife and I used to keep our emergency fund in a savings account with our local bank, but this all changed once online savings accounts became a reality for us and we started to learn more about high yield savings accounts that had more competitive interest rates that they would be offering. I wasn't even getting 0.5% on my savings account at my traditional bank. But then we moved to an American Express high yield savings account, and then we moved to a CIT bank high yield savings account, and we haven't looked back since. Online savings accounts can be better and more profitable options for storing money. Plus, they are FDIC insured, just like your big name banks, so you don't have to worry about that. And we've been able to move our money in and out of our high yield savings account relatively easily, no problems. Typically, that's not really a big deal, not a concern with the high yield savings accounts that are out there. The fifth money myth is that your family gets your assets automatically after you pass. This is one of the most common misunderstandings when it comes to personal finance. Yes, you need a will and a plan for your estate. This is something you need to handle ASAP. Make sure that you are designating a beneficiary in your 401k plan, your savings accounts, and really anywhere that you're saving money in, you want to be sure to designate beneficiaries so that way you're not leaving it up to the government to say, hey, your money's going to this person, or you can avoid probate for certain accounts, obviously, but you want to make sure that you're getting a control over what your money does in an unfortunate event, in an untimely event that you're no longer here. Number 6, 401k and 403b money can be taken out anytime. While I love these kinds of retirement accounts, there are rules that you have to abide by. Typically, you're withdrawing from these accounts after the age of 59 and a half. So to be able to invest and have the option to take money out whenever you want, make sure you open a taxable savings account where you can invest in low-cost broad-based index funds and or ETFs. And that way you can still do your investing with your retirement savings accounts and your taxable accounts, and you can use the taxable account money whenever you need it and just take from there. The seventh money myth is that you don't have to pay taxes with cryptocurrency gains. There's been so much craze in the last few years over cryptocurrencies like Bitcoin and Ethereum and even the NFT space. And with the craze comes misinformation. For the record, any gains or money you make by selling cryptocurrency will have tax consequences. So stop thinking you can avoid taxes with cryptocurrency. I've been here almost 40 years on this planet, and one thing I've learned in the last 10, 15 years, as I've been in the workforce and learned more about personal finance, you will have a hard time avoiding paying your share of taxes. And while there are strategies out there to help you reduce the amount of taxes you owe each year, it's something that we'll talk about in the future, but you want to be careful and tread carefully with cryptocurrencies and taxes. The eighth money myth on this list is that renting is a waste of money. Not everyone needs to buy a house, townhouse, or condo, and better yet, not everyone should buy a house, townhouse, or a condo. Renting is a great way to stay away from things like home insurance and maintenance costs that you would have to pay out of pocket. Personally, I enjoyed renting, but now with a family, I definitely see the benefits of home ownership. But even if you are single and you're interested in getting a condo or a townhouse or even a house, that's your prerogative. Do what makes you happy. I would just be careful because, renting is a great way to knock down debt and save a lot of money for the future. You don't have to rush into home ownership, especially if you don't have the means to pay for that mortgage. Unexpected maintenance costs that will happen, because that will happen. The ninth money myth is that life insurance is for everyone. As much as I rave about having term life insurance, there will come a point where you won't need it. That's why I advocate for term life insurance. It's cheap and serves the temporary need while you save and invest as much as possible. That's just my personal take on it. People want to talk about whole life insurance and cash value policies. That's another topic for another day. I just believe in having a temporary low cost insurance plan while I'm able to invest in my IRAs, my 401ks, so that way I'm able to maximize the potential wealth that I'm going to have in the next 30, 40 years. The 10th money myth is that financing is the only way to get a car. This is far from the truth. Not to mention, financing is a way of overpaying for something that literally loses value the instant you make that purchase. Look into getting a used car and try to pay cash for all of it or most of it. And this goes for leasing a car too. I would just not do it, plain and simple, when it comes to leasing. And to learn more about this wealth killer, check out the video on the screen. Peace.